Welcome to another edition of the Pilot's Advisor, and we have a very special guest today. We're going to be talking to Kelly Phillips of Fairway Mortgage. She's been a mortgage broker in the industry for many, many years, and we're going to gain and gather some insight on what the current state of affairs are.
Thank you so much, Ryan, for having me. It's such an honor to be here today. And yeah, I would love to share some insight about the market and kind of what's going on and projections and what everything looks like.
So Kelly, first of all, I just want to get back to how long we've known each other. I think we met each other back in 2005. Does that sound right to you?
That's about right. Somewhere a long time ago, but yeah, about 20 years or so.
Yeah, because Carrie and I had just moved to Charleston, and I remember I was still had my real estate license back then,
Yeah.
and I walked into the Carolina One office. I ended up meeting Kelly, and she happened to be from Cincinnati, where I'm from, and we even knew some of the same people. She was you were at Fairfield High School.
That's
I
right.
was from Wyoming, and they're not too far from each other. My mom actually lived in Fairfield, so we
Yeah.
played the name game, and I think it was from then on that I've had a business relationship with you and have used you as a personal lender amongst many other real estate deals.
Yeah. Yeah. It was pretty fun having you come in, and then just all of a sudden we knew so many, different people and from the same area, a lot of connections.
Absolutely. So here we are 20 years later. The reason why I wanted to have you on the podcast is I get asked all the time real estate questions. Hey, we want to buy a house. Hey, we're selling this house. We're moving at retirement. And I've worked with you so many times. I think you're an amazing resource for any of my clients as far as getting their lending needs, refinancing, whatever it might be. And I thought it would be a good thing to have you on the podcast so people get to know you. But on top of that, let's talk about the current state of affairs as well.
All right, that sounds good. So the market, oh my gosh. And the big question is, when are the interest rates going to drop? And I think we've all been waiting for that to happen for quite some time now, and certainly anticipated that happening, a year or so ago once inflation started shifting, and they're still, unfortunately, kind of at the higher sixes, but there are continued projections for them to be reduced, this year or even next year. So there are some projections out there, like Fannie Mae is thinking low sixes, NAR's upper five, or I'm sorry, NAR's actually thinking that they'll stay, closer to the 6.75 range or whatnot. So you have different projections, and they're not all aligning, but it's definitely driven by our economical status, and hopefully the inflation will continue to come down a little bit, but it's not quite where they're wanting it to be at this point in time. So,
Well, and I think that there's some things that have happened in the market that make it very difficult right now. First of all, rates where they are right now, if you look at historical numbers, is not that bad. But I think that we
not at
just
all.
got spoiled for
100%.
so many years with rates between. I mean, we had like 2.5%, 3%. I can remember back in the day getting a rate that was like 5.25, and I thought I hit the lottery. And I think,
Absolutely.
yeah, and I think the hard part now is because real estate prices have continued to go up, and then from where rates were to where they are now, people's buying power got cut in half. So you have a bunch of people that have a mortgage at like 2.5 to 3%. They don't want to move because they're looking at where
Right.
rates are now. And then those people wanting to buy a house, they have half the buying power, and house prices have continued to go up. So it's a
Right.
very, very challenging market right now.
Absolutely. They're actually saying, like, once the rates do come down, and they're projecting, once they hit around that 6% mark or so, that's going to essentially open the floodgates for about 5.5 million people to put them in the position to be able to buy. So, right now it's still a seller's market. The inventory that's out there is lower than what would be considered a balanced market. So balanced market's about 6 months or so for the inventory to be sitting before it goes under contract. And right now, kind of on average nationally, it's about 2 months. So it's still considered a seller's market, but there's a lot of buyers out there who want to buy. I think there's hesitation with where the rates are, but just like you said, I mean, the rates are really, overall, they're good. They're good. And, based upon perspective and experience of where people have seen the rates in the recent years in the 2 and 3%, there are a lot of people who are like, oh, they're high. But gosh, 15, 20 years ago, 10 years ago, the rates are really good right now. So it's certainly a good time to buy, especially if you can get ahead of the game and in front of those other buyers who are going to be, jumping off that fence when the rates come down, because you do have the appreciation year over year. So if you can get in where it's a little bit lower price point wise for a home, you're going to be that much further ahead.
Well, and you've been in many, many markets. You've been doing this for a long time, and I think that's the hard part, especially if you're in a very desirable area.
Right. Right.
You live in Charleston. I think that it's tough to think that there's going to be a correction in some of those markets, and obviously, real estate as a long-term investment continues to go up, and
Absolutely.
and I think it's just tough because you watch a lot of people right now that want to buy a house.
Right.
But when you start looking at real estate prices and what their mortgages are going to be,
Right.
it is a tough market. It's tough for especially younger individuals to have home ownership. And
Absolutely.
I also think that most, like it reminds me of investing where people allow the taxes to affect their investing decision. And I see that right now where people actually want to move, but they're not willing to walk away from that mortgage that they have that's at
Right.
3%.
Right. Absolutely. Absolutely. And I've seen it is definitely tough for younger individuals or people starting out wanting to buy their first homes and actually being able to afford something in the market. And you have other markets that are growing at a much quicker pace than some markets that, people are moving, like Columbia, South Carolina. It hasn't necessarily been a hot spot for growth over the years, but right now it is. So, there are people who are looking in those areas that are more affordable and where they can actually get in and get into their first home and start building some equity and then some investments and then, creating a foundation for their family and for their future. But it's the Charleston market, for example, it's really, really tough for first time home buyers to get going just because it's your lowest price point of a home is so high. So I'm seeing people go in together and, I've seen friends go in together and buy, let's go in, we'll buy this home together, we'll live in it. And then in a couple years, we can hopefully sell and then we'll just split the equity and then roll it into our own homes. So it's interesting what's going on.
Well, and at least that way, I guess they're building equity versus just sending it off to rent each month where it's gone forever.
Exactly.
I also
Exactly.
find it very interesting. A market that comes to mind for me is Austin, Texas. I mean,
Sure.
real estate there was off the charts, like it just
Hmm. Right.
just going up a crazy amount. And for the first time ever, it's actually pulling back, and home prices are going down, and things aren't moving as quickly.
Right.
And I think it's interesting because it just shows you no different than some places in California where it's got to pull back and correct itself a little bit at some point,
Sure.
or of course the demand. I mean, everything that we talk about is supply and demand, right?
100%.
Yeah.
Absolutely.
So
Absolutely.
so Kelly, how many years have you actually been doing this?
Gosh, I've been in the business for about 25 years.
Okay, gosh, we are getting old. That's
No,
scary to
we're
hear
not.
that.
No, you may be getting old. I'm not getting old.
I'm getting old, but you've helped carry myself with many, many real estate transactions. Communication is amazing. The money's always there. Closing always happens on time. Never had a negative experience with you at all.
Thank
Um,
you.
and so if individuals wanted to reach out to you, they have home lending needs, what is the best way to get in contact with you?
Yeah, so they can go to yourfairwaylender.com and all of my contact information is there. So call me, email me, whatever works for you, text me. I'm very flexible. So many different people work in different ways. So I will shift and I will accommodate whatever is the best way for communication for that particular customer. And then we do try to keep everything smooth and on point through the process. So, thank you, Ryan, for recognizing I'm very, very efficient and timely and just always making sure that everything is good and good communication. And we do we try to keep everything in house. So underwriting's in house, processing's in house. And then, I've been doing this for so long that I'm well versed with guidelines. So I try to do everything up front and review each customer's situation and see what's going to work best for them. But yeah, you can text me, email me, call me, whatever works.
Well, I will include all your contact information in the show notes with a link to get in touch with Kelly if you have any needs. And I know you don't like talking about yourself, but I'm going to embarrass you a little bit. So, you are like one of the number one mortgage brokers in our whole country. Can you tell us a little bit about that? Tell us a little bit about the company that you work for and why it's different. I mean, obviously, no different than myself being in the investment business. You evolve, you get better, you might switch companies, and you want to go find, or like I think about it every day. My job is to go find the best thing for my clients, to go find the best investments. If I can do it cheaper, I can do it better. And the same
Right.
thing in your industry. How did you get where you are now? And just tell us about Fairway. And then I
Yeah.
also want you to tell us about how you're one of the most recognized mortgage lenders in the country.
Oh, thanks, Ryan. Fairway, gosh, I wish I had found Fairway years and years and years ago. It is just truly an amazing company to work for. They focus on speed, taking care of people. I mean, all the people who I work with are just salt of the earth people who care about customers and care about service and care about being on point. And, as far as like donations and philanthropy within the company as well. It's a very giving company. And I can't say enough good things about Fairway and the people, everybody I've experienced who has worked within the company. I feel like everybody is on the same page as far as mindset and customer service and just taking care of people. And I've been through different companies over the years, and I've struggled with aligning with where they want to be in regards to customer service and where I wanted to be in regards to customer service. I want to be the Ritz-Carlton of the mortgage industry and really just truly roll out the red carpet and take care of people, provide a seamless experience. And Fairway helps me to be able to accomplish that. With our underwriting team, I mean, we can go underwrite a file in a day or two. If we need something cleared quickly to get it to the closing table, we can do that. We have the ability to swiftly move. We have an array of products. So I really I love. There's so many things I love about Fairware, but but so that's about the company. Over the years, as far as like what has propelled me in my business is constantly searching for the high level of customer service and what can I do to provide a better experience for a customer. This isn't rocket science. There's a need, and it's about knowledge and creating systems to really take care of people efficiently and effectively, and just having that knowledge and that foundation in the background of where I'm going to best take care of them and knowing the products and knowing the guidelines. So really the systems has kind of made my business what it is, and just really the focus on taking care of people.
Attention aviators, when you've spent years in the cockpit managing the complexities of flight, isn't it time you navigated your retirement with the same precision? Introducing retirepilots.com. Right at your touchdown zone on our homepage, there's a beacon flashing, "Get my free toolkit." Click that and you'll be cleared for a direct route to Ryan's retirement toolkit, tailor-made for pilots like you. Inside, you'll find two of his important works, The Pilot's Advisor and Pilots Retire Early. Between these two books, you can decipher the 9 critical decisions when retiring before 65 and discover the 7 lessons to help pilots land safely in retirement. But that's not all. This toolkit is packed with altitude-high value, including extras to get your retirement plans off the runway and light the afterburners on your 401k. Vector on over to retirepilots.com to grab your toolkit, and let's embark on this journey together.
Yeah, systems and procedures. I mean, get better at your business. So that all makes sense to me. And of course, I wouldn't be presenting you to all my clients and the listeners that we have if I didn't think you were top notch. And I've had many experiences with you, and you just get it done in an organized manner. It's never last minute. She's really good at what she does. I don't know what else to say.
Thank
So,
you. I appreciate it.
and an amazing businesswoman. I mean, I've watched you grow and over the years, and I think one of the best things, not only have you just become your business model has grown and had more and more clients and customers, but they all come back. They all love you. And I think that that's just a testament to how you operate and how you are as a person in general. So, thank you for all you do. The last thing I want to talk about too, I try to not have our podcast go much beyond 20, 30 minutes, but I want to pick your brain as well. You've been through some crazy times. I mean, you were in the lending business, through 2008 and the mortgage crisis. And we always joke that when things are really, really good, there's a million real estate agents out there and there's a
Right.
million
Right.
lenders out there.
Right.
And then you have some sort of a correction and then they all kind of die off and go away. And, the tough people are the ones that stay and survive.
Yeah.
Can you talk about, I mean, I think everybody remembers the mortgage crisis, but can you talk a little bit about what we went through in 2022 with inflation? I mean, it's the quickest uptick in inflation I think we've had in our country's history, and how it's slowly eased back. I think right now, most people would say, if you look at the numbers, we should be having rate cuts. We should have already had rate cuts.
Right.
I find it very difficult for me on my side because I think seems to be a little bit political right now. But I think it's coming. It has to. I mean, inflation has pretty much halted, but just talk us through what the last 2 to 3 years have been like for you and your business with interest rates and everything else.
Sure, sure. Oh my gosh, when the rates dropped in 2020, I mean, it was more so I called my friends, I called my family. I was like, y'all won't see me for a little while. I just have to work, 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 work. And, it was crazy, off the charts. I mean, normally I don't know, we'll have about 20 closings or so a month, but back then it was 50 closings. So it was insane. And one thing, going back to how wonderful our company is very forward thinking and strategic of how are we going to efficiently and effectively help these people through the refinances. And they were able to or approved delegation for underwriting. So we actually did it where I did a preliminary underwrite on all my files, or the majority of my files. My processor, she went through and she underwrote for the final underwrite, sign off on it, and we were rolling. So it really those files didn't go through the full process. So very forward thinking and shifting, but it was crazy back then for sure. A fury of loans and people buying, and as far as home prices, oh my gosh, I mean, they were going up 15, 20, 30%, if not more, depending on the neighborhood, depending on the area. So multiple offers. It was just insane busy. Over the past couple years, it definitely hasn't been nearly, anything like that as far as being busy. And, this is definitely, like Ryan said, as far as like repeat and whatnot, this is relationship business. So we take care of people. We have the relationships. It is definitely slowed down over the past couple years with the decrease in rates, and then, the uncertainty in the market. And we have been waiting for the rates to come down, and I think they'll be lower by the end of this year, but how much lower, and how quickly are we going to get there? So there has been a shift in the market. There's been a shift in inventory. Like Ryan had mentioned, if you have a 2 or 3% interest rate, if you want to go somewhere, it's tough. It's a lot of people do not want to let go of the interest rate that they have, and pay a 6.5% rate on a new house. So nor can they. That's another thing is some people are like, well, shoot, I can never get rid of this house. I'm kind of stuck per se. It's like you have that equity and you can roll it into another house, but it definitely is a difference in financials. I have seen an uptick in credit card debt. So that's certainly a little concerning. And those people who do have the lower interest rates, like, okay, well, how are we going to tackle this large credit card debt? So the inflation's, the spending's there. So inflation's still up, but it's definitely better than where it has been. And there are certainly political things going on in the market. And I think that's, hindering us from being able to move forward as far as the Fed cutting the rates there. So a lot going on, definitely a slower time than where it was in 2020, 2021, 2022. But that time right there was crazy. I mean, I don't think we'll ever see anything like that again in our lives, but it's still, I think it's still a solid market. and it's a good market. It's just it's a little bit slower than what it was, or a lot slower than what it was, but it's not too far different from what's normal.
Yeah. Well, I would agree with you. I'm not convinced that we'll ever see rates back like that where they were. It just sounds to me like feast or famine. And for a while
Right.
there, it was just a crazy feast. And then boom,
Right.
2022 happens and things really, really slow down. And
Yeah.
that's where you find out who you are and who your clients are and how you can
Right.
help them.
Right.
And a great time, like we've talked about from a business perspective, how do I get better? It gives you a little bit of time to breathe and look in the mirror and say, hey,
Yeah.
here's are the things I need to improve on because
Right.
the market will turn, it will shift at some point. I think rates will come down.
Absolutely.
And I always forget about this. We talk a lot about just business type stuff, but I forget that you truly have a peek behind the curtains of seeing how things change for your clients and customers as far as debt.
Right.
You get to see how the effects of inflation and how it's affected
Right.
people over the years. So I
Oh,
think that's
yeah.
very interesting. Yeah.
Yeah.
So Kelly, first of all, I want to thank you for taking the time out of your day to be on the podcast so we could introduce you to everybody, so we could talk about mortgages and the real estate market. Is there anything else that you think of? And I know I'm putting you on the point, just like I do, but is there any one thing that you want to say to anybody out there that's either looking at selling their home, looking at buying a new home, things to think about in the current market environment, or just general advice that you could give from somebody that's been in the market for 25 years?
Sure, sure. So I guess the biggest thing that I would love to share or just have people consider is if you're scared to get in the market or to make that shift, there's no time like the present. I mean, if you think about it, there's still appreciation going on in the market. And if you wait a year, if you wait 2 years to actually get into the market, you're gonna be paying more on a home because of the natural appreciation that is occurring in the market. So even though the rates might be a little bit higher now, you can always refinance when they do come down. But if you can get in now, sooner rather than later, you'll start building your equity, building your appreciation, and your investments. So, and then if if you do own a home and you want to make that shift, once again, you could always refinance or whatnot in the future, and with the lower interest rates once the market shifts.
Just
So
just makes me think of all the stories we've talked about over the years. Coulda, woulda, shoulda. Oh, I wish I would have bought that
absolutely.
property. I wish I would have
Yep.
done this. And
I hear that all the time. And I'm like, but had you 5 years ago, look where you would be now. And I mean, I hear so many people say, they regret not doing this. They regret not buying that home or, pulling the trigger because they were scared. So, as far as interest rates, yeah, they're a little bit higher now than where they were, but they're still really good. And then get into the market.
yeah, well, and it is scared. No one can predict the future, but I do think some rate cuts are on the horizon, and I do think
Sure.
rates will come down here shortly.
I agree.
But the opportunity is now, and I 100% agree with you that
100%.
you got to jump in, and then you always have that option of refinancing later on, and maybe on a future episode we'll talk about the numbers where it makes sense to refinance.
Sure.
Another thing about you that I think's always been amazing is when I've talked to you about refinancing, we look at the numbers. It's not like, oh, I got another deal here. It's like, well,
Right.
Ryan, it might not make sense for you to refinance, or Ryan,
Absolutely.
you're so far, down the line of the amortization schedule. I don't think you should refinance. So I think having somebody that's trusted that looks at the actual numbers and you can talk about is very valuable. Thank you so much for being on the podcast today. Very much appreciate it. I'm sure we'll have you back in the future. And if I start getting a lot of questions from listeners and clients, then we'll bring you on and maybe even get you to answer some of those questions.
Sounds good. I'm always here and I'd love to do that.
All right. Well, thank you so much for being on, and we'll have you back, and have a wonderful business week, and enjoy the rest of your July.
Thank you so much. You do the same.
All right. Take care, Kelly. It's always great talking to you.
Thanks, Ryan. You too.
Information is for illustrative purposes only and does not constitute tax, investment, or legal advice. Always consult with a qualified investment, legal, or tax professional before taking any action.